Hello, good morning and welcome to Core Finance. I'm Charlie Gibson. Now, as you know, as regular viewers will know, every now and then we have one of those companies and they come back and then we interview them and then we say, come back when this has happened, tell us a little bit more about it. Well, one of those companies is Pembridge Resources and they have just started trading again. This time today, for the very first time, they're back on the main board. They're not back on the main board, they've moved from AIM to the main board, so they've gone to the main board for the very first time. So joining me from Pembridge is the Chief Executive Officer, David Linsley. David, very good morning to you.
Morning.
Thank you very much indeed for coming back and joining us.
Good to see you.
And telling us all about it. So,
Yes.
so do tell us all about it. Have you got a stride in your step now? You're on the main board?
I suppose, yes. It's been exhausting, though. I mean, it's hard work putting all this together, but the legal team did a fantastic job, and here we are. I mean, everything was done within time and within budget, so we're very happy.
So you moved from AIM to the main board. Just tell us why you did that.
Well, we felt that for the strategy, it was better to be on the main, to have the main listing. But principally, when I took over at China Africa, as it was then, that was in February. So that was 2 months into a 6-month clock to get a deal done.
Yeah.
And so with 4 months to go, I was looking at...
So this is the AIM rule: if you're a cash shell, you've got to do a deal with 6 months, you can't hang around.
Exactly, you can't hang around or you'll be suspended, and of course if you're suspended, your shareholders are then
Upset.
stuck in limbo and they're upset, and it seemed to me that there were transactions I was looking at which looked okay, but I wasn't going to leap into something just because I had to get it done within a short period of time.
Because when you go for your meeting at 5 months and 29 days,
they know
you're up against it. Yes,
the person on the other side knows that you have an issue. Exactly. So I felt that it was better for the shareholders to say, look, let's just stop right here. We suspended. We change. We move onto the main board. I think that it fits our strategy better, and we can get back to work. And in fact, we've been busy working over the past few months doing more due diligence on projects. We can step up that process now and start to do a much deeper dive on.
Do you have an indefinite time frame now in which to do it?
I think it's now 18 months.
Right.
So
but you've got a year and a half, so you're very happy with that.
Very happy. Yeah. No, that's more than enough time.
So we're not going to, and the clock starts ticking from now.
Yeah.
So
or Friday, yeah.
As long as you're not walking into someone's office in 17 months and 29 days,
that's not going to happen.
That's
not going to happen. No.
So tell us a little bit. Tell us a little bit about the process, just for for our viewers out there, for anyone else who's maybe thinking about moving from AIM to the main board. Was it an easy process? How long did it take? How much did it cost? Was it cost effective? All of those sort of things.
I mean, I found it very easy because our lawyers did such an excellent job. I didn't have to do very much at all. I just turned up. They handled everything, and it was seamless. But in terms of cost, it's about the same. It's about the same. You don't have nomad fees, but maybe you have slightly more legal fees, or the listing fees are a little bit higher. So it varies, but it works out about the same.
So it swings and roundabouts, in your opinion. I suppose that would raise the question: why would anyone be on AIM in that case? But I mean, obviously, a lot of people think that there is a very good reason to be on AIM, but that's the reason that they are there.
Yeah, but there are also some slightly popular misconceptions. For example, people say that when you're on the main board, you can't raise any more money without reissuing your prospectus. Well, those rules changed recently. You can actually raise up to 20% of your market cap. You can reference the prospectus that you lodged in the first place, so that speeds things up as well. And it's a different market in that sense. AIM has got a, people have said in the past, you can just keep issuing stock. You just keep issuing shares and raising more cash as you need it. Well, yes, it's slightly harder to do that on the LSE, but if your strategy is right and you don't need to keep panicking and running back to the market for more money, then it works very well.
So it's horses for courses a little bit.
Yeah, it just depends on what you're doing exactly and what your plans are.
So look, David, I'm not going to ask you for chapter and verse, obviously, on your projects, but just give us. Why don't you give us a flavour for just what you're looking at, why you're looking at, where you're looking at?
Sure, of course. I mean, we're doing more detailed due diligence on about 4 or 5 projects at the moment. 2 of them are gold, 2 of them are copper. They're in North and/or South America. So we're quite excited about those, but it takes time. These transactions are, as I said earlier, these are not things that you just flip the switch and suddenly you announce you're going to do something the next day. You also have a certain degree of price sensitivity in these, where markets have moved. Copper's now $2.95, we've got zinc at 141, and suddenly the sellers are a little bit more confident, let's say, with their short-term outlook. They think you should be paying more. So We're confident, though, that through our network and through the connections that we have and the people that we know, that we can add value to some of these assets in ways that others can't. So there are still projects available at good prices, quite frankly, and we're doing our work. We're diligently doing our work.
Is there a case there then that perhaps changing the strategy, just, because there are commodities which are hot, and you've named a couple there. There are commodities which are a lot less hot, and I might throw nickel at you, for example, which, has had a pretty miserable time. Is there a case for looking at commodities where the prices are low for whatever various structural reasons they are there, in the expectation that they will rebound?
Yes, but I mean, that market tends to be at the moment things like iron ore, which we're not going to do anyway. That's iron ore is a
big boys game.
Well, it's a trading game, isn't it? You don't buy small iron ore assets and flip them. So, so no, I don't think it's not really that case. It's more a case of trying not to be blown along by a short-term trend. If you feel that the market is going to support something in the long term, then you want to concentrate on it. Now, things like lithium, for example, I think we've talked about it before. I think that's a bit of a bubble, and so I have no real interest in looking at it. Cobalt, yes, we are looking at cobalt. Now, that's had a real run recently, but that's not why we're looking at it. We happen to have come across a nice asset. So I think you have to take a long-term view. And when I read about China trying to rein in spending on assets abroad, which I was reading in the paper last week, where they were saying stop buying office blocks and stop buying football clubs and things like that. But we do actively encourage you to buy mining, agriculture and fisheries.
And when they say that, do you think they mean we encourage you to buy mining, agriculture and fisheries overseas, or are they saying we want you to buy mining, agriculture and fisheries domestically?
No, the article was actually about overseas spending by Chinese corporates and Chinese high net worth individuals, and they were saying that the government were trying to rein them in. Don't buy the shard, buy the mine. So, which is good. I mean, that's good. That's good for all of us.
You've got estate agents all around the country now suddenly
crying in their beer.
Gulping into their coffee, but you're probably right. They're crying into their beer.
Yeah.
So, just within that context of those assets, just remind us what your strategy is. It's either production or near production assets, isn't it? In good, well-known mining jurisdictions. Is that a reasonable summary?
Yes, it's production or near production. It's permitted. We have to see something permitted. I'm not prepared to sit for 12, 18 months or 24 months while
wrestling with the government.
Wrestling with a local permitting office. They tend to be assets which may have gone through a bankruptcy, maybe were mismanaged, and where we feel that our team can do it better, quite frankly. So if as a result of the work that we've done, we look at an asset and say, this is where we can add value, and we know we can add value at this level, then it's something we want to buy. It's not about buying something because it's cheap. It's not just because that's cheap, therefore you may make money.
Right.
I'm not in that game.
Okay, so it's buy it at a fair price, but you can make it better. You can improve it. It's like you build your fixer-upper. You buy your fixer-upper, fix it up, and sell it on.
Exactly.
Essentially that. And how much money have you got? And how much? What can you gear that up to? And what's your treasure chest, if you like, your war chest?
Yes. Well, we just announced we raised just about £2.3 million, which is great for due diligence and operating expenses. Behind that is quite a lot more money in debt, and again, debt is attracted to near-term production and cash flows. So, we have plenty of money. In fact, some of the money we could put to work in a very small transaction, or we may choose not to. We may just say we'll wait and develop something, and then, like I said, bring debt on board or any other type of financing, royalties, streams, you name it.
Can you give us an upper limit of where you're?
Well, there's one transaction we're looking at, which I think we would probably invest about $2 million into it, and there's another one which could take 30 or 40 million.
Okay, so there's quite a wide range of possibilities.
Yeah, but you can do that when the asset can support, for example, debt or a royalty. Then that level of gearing is quite significant.
The important thing for you is you have a currency and it has a value and you can use it.
Well, there is that too. We have the shares. We have a currency, and if we want to joint venture with somebody and they like what we're doing, they like the team and they like the strategy, then why not?
All right, David, I'm afraid that's all we've got time for. Thank you very much indeed. That was David Linsley, the Chief Executive Officer of Pembridge Resources. It's one to watch. I'm afraid that's all we've got time for, but join us again next week where we'll be looking at more such companies, bringing you more opportunities. In the meanwhile, I'm Charlie Gibson for Core Finance, and you have a very capital day.